Hey! In today's video, we're diving deep into the first 2 hours of action on the US 100 index. Join me as we dissect the market dynamics, explore my personal trading approach, and uncover valuable insights to elevate your trading game. So, without further ado, let's jump right in. The graph depicting the US 100 index utilizes a 1-minute time frame, with the timing presented in GMT Standard Time as employed in MetaTrader. The trading session kicks off with an impressive bullish surge aligning with the 200-day exponential moving average. Now, it's important to note that I generally avoid trading the opening candle due to specific scalping strategies I employ. These strategies are intricately woven into the fabric of market cycles. As the price encounters the 200-day exponential moving average, it transitions into a sideways movement. Personally, I tend to steer clear of such sideways phases to minimize the risk of being stopped out frequently. Once the price breaks free from the grasp of the 200-day exponential moving average, a pivotal moment emerges. A reversal candlestick pattern materializes, showcasing a glimpse of sellers entering the scene and subsequently driving the price down. This pattern strikingly resembles a shooting star, which, if seized upon, can yield substantial gains. You could consider initiating a sell order upon the candlestick's close, placing a stop loss above the high, and projecting a take profit of at least twice the candlestick's length. A little later, a noteworthy development unfolds. The price revisits the support level established during the opening market hours. Regrettably, I missed out on this trade due to a conversation with my brother, which momentarily diverted my focus. However, hypothetically speaking, if I were laser-focused, I'd await confirmation via an engulfing pattern before entering. Once confirmed, I'd seize the opportunity with a bold take-profit target at the 200-day moving average. It's apparent that the price found solid footing at this particular support, having been tested once already. The third touch resulted in a bearish rejection candle with a substantial upper wick, promptly followed by a bullish engulfing candle, a truly enticing trade prospect. Following this bullish surge, an intriguing double top formation materializes on my radar. The price subsequently breaches the lower boundary of this pattern, propelled by a robust bearish candlestick. Traders who pounced on this setup could have initiated a sell order as soon as the candle closed, employing a meticulous scalp trade approach. Now, onto the trade I personally executed. As a second double top pattern emerged, the price embarks on a bearish journey defined by 3 consecutive bearish candlesticks. Subsequently, a pullback forms within the confines of the last bearish candle, characterized by an inverted hammer pattern. This signaled a ripe opportunity for me to enter the scene. Without hesitation, I launched a sell order with my sights set on the 200-day exponential moving average as the ultimate take-profit target. Furthermore, I observed another intriguing pattern, a double top, often referred to as the bearish tower top. Despite not engaging in this trade due to the day being a Friday and my focus being somewhat compromised, it's essential to acknowledge its potential. Many traders could have capitalized on this opportunity by aiming for the 200-day exponential moving average as a prudent take-profit goal. And that, my fellow traders, wraps up my humble analysis for today. I trust that these insights will serve as a stepping stone towards enhancing your trading mindset and strategies. Thank you immensely for joining me on this journey. Until next time.